Yes, well, good afternoon. So we do expect that the US Fed will cut interest rates when they meet at the end of this month. And we think that'll be the start of a total adjustment of about 100 basis points. So a cut this month and then another in September and December and then early 2020. So that's quite an aggressive move, given the economy in the US is still doing quite well. But clearly the Fed chair has signalled that he's quite worried about inflation being so persistently below target. And as you say, we've got other central banks in the region cutting rates. So Korea today and the Reserve Bank of Australia in June and July, and we think the Reserve Bank of New Zealand will cut next month. But the local Asian central banks have, I think, less room to cut interest rates than the Fed does. So you would expect those interest rate spreads to actually narrow by the US cutting more than others. And we think that will mean a weaker dollar and probably higher Asian currencies, particularly Aussie, going forward.
Right. We're expecting Bank Indonesia also to cut rates for the first time in 2 years. If you look at the numbers coming in from Bank Mandiri, their lending growth for the year thus far came in at 12%. Now, when you benchmark that to what the economy is doing, growing at roughly about 5%, that seems like a good run rate as far as the credit cycle is concerned. What do you expect that rate cut from the central bank in Indonesia to then do for the economy? Because retail demand for loans and corporate demand for loans seems like there's enough and more appetite for it.
Well, Indonesia is not one of the economies we cover closely, but I think the issue here is right across the Asian supply chain is that, the worries that these US-China trade talks are just dragging on, and some type of deal seems quite elusive, and if it will happen at all, and what form does that take? So many central banks in the region, including Indonesia, it seems, Korea, Australia, getting ahead of that expectation and a slowdown in the economy, getting ahead of worries about inflation being persistently below target, and easing monetary policy where they can. And I think the goal there is to act relatively early, relatively aggressively, particularly when you've got limited policy space, to try and get ahead of any weakness that might come down the line.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.